These retirement plans are a trust that dictates exactly how that plan's going to operate. What most people don't realize is you can get those provided a lot of times for free. As with anything else, you kind of get what you pay for. You're going to be restricted in terms of what that thing's actually going to do.
And it's going to save the business owner a ton of time up front. It's going to prevent them from getting in trouble. You can go to a store and buy a cake mix, just add water and you'll bake it and you get a cake, right? When we work with you as a TPA, we're going to go and get flour, we're going to get eggs, we're going to get sugar, we're going to put it all together, we're going to bake a custom cake. My name is Randy Luebke, and I'm the president of Lifetime Paradigm. And I'd like to welcome a guest here today. His name is Rone Davis. Rone is representing the president, actually, of the company called Front9, which is a third-party administrator. And we're going to talk today a little bit about the role of a third-party administrator and how they help business owners to create retirement savings plans, right? So, Rone, welcome.
I appreciate it, Randy. Thanks for inviting me today.
Yeah, it's going to be fun. So the goal here is to really have a conversation about a business owner. We're going to look at it in two ways. You have a business owner that has no retirement plan at all, but they think they might want one or need one.
Sure.
That'd be a good idea. And then we're going to look at a business owner that already has one.
Absolutely.
Right? So first of all, let's talk about the role of a third-party administrator. And you people probably have heard of the TPA, right? That's the initial stand for, is third-party administrator. So what does a third-party administrator actually do for the business owner? Right?
Yeah, we're the people that are tucked in the back closet that they don't really talk about, and no one knows what they are or what they actually do, right? Yeah. Until they have a problem. Then all of a sudden, we're some of the most important people that they bring up.
That's true.
So a third-party administrator's role is basically all of the, we'll call it some of the legal and compliance, as well as calculating some of the numbers behind the scenes. So what a TPA does is when you have a retirement plan, you have to draft these things called plan documents.
Right.
So it's up to the third-party administrator to work with the advisory firm and the client to draft these plan documents. Because the only way you can actually contribute to a retirement plan is obviously if you have a plan document. I know that seems silly, but it's not just opening up an account. If you don't have a document, you don't have a plan.
Yeah, but why do you have to have the document? Because it's a trust, right?
It is a trust.
Absolutely.
That is correct.
Yep.
So, and a lot of people don't realize that is these retirement plans are a trust. Now, they're a special type of trust. It's not the type of trust that you set up. So, here's what happens to my money when I die.
Right.
But that plan document is actually the trust document that dictates exactly how that plan is going to operate. So, what a TPA does is help draft that, and then we also help keep the plan on track. So with that, you have what's called testing. So what the IRS is also looking at when you're trying to do benefits or when someone's trying to contribute is they're comparing the benefits that go to the highly compensated employees or owners versus non-highly compensated, basically everybody else, right?
Okay.
So to make sure that all those benefits are considered fair, you have to test the plan. So what a third-party administrator does is they do that testing every year. And they calculate all the numbers, make sure all the benefits are fair. And then one of the other ones is every retirement plan basically has to file like a tax return. So that tax return...
Not basically file a tax. They have to file a tax return, right? That tax return's got a number, right?
It's called a 5500.
There we go. Yeah.
And a lot of people don't realize who's responsible for that. They always think, oh, my CPA does it or my advisor does it, but it's actually not. It's normally the TPA that does it. Or I'll put it this way, the TPA should be doing it because they know actually where the numbers go on there.
They're right. Right. So I want to take a step back because you're talking about testing and so on. If I just have myself, if I'm an entrepreneur, solopreneur, right, or I'm married, then we're going to have an owner-only plan, right? Commonly referred to as a solo K.
Yep.
Your favorite not word, right? But the way I like to explain your role to a client, you have three functions, right? Initially, you're designing the plan, right?
Absolutely.
You're taking and you're listening to the employer. Right? What are you trying to accomplish? Are we trying to, create a benefit to recruit and retain employees, right? Are we trying to create a benefit for yourself? Are you trying to do both? What it is? So I've listened to you. You're really good at working with the client to help them figure out, frankly, what it is they want to get. So that's step one. You do this plan design through a proposal.
Yep.
Right? Then you draft those documents, right?
Yes.
And we're going to come back to that because there could be multiple trusts, right?
Absolutely.
All right, so we'll come back to that. So you've drafted the documents, you've created the trust for them too,
Yep.
right? You've done all that legal work. And then finally, as you said, on an ongoing basis, every year, you're going to look at the plan to make sure it's compliant, right? So that all those contributions that my client employer makes into the plan, they get to keep them in the plan, right? And the IRS doesn't reject them and make them come out. Is that fair? Is that it?
That's a very fair estimate in terms of what we're doing and how it's all working. Absolutely.
And that's really why you're worth, why we pay you the money we pay you, because you're doing a lot of very important work, right? Because I know I can get a plan document. You said document. I can get a plan document from Schwab.
Absolutely.
Want to talk about that for a moment?
One of my largest pet peeves as it relates to that.
Yeah.
So what most people don't realize is those documents, a lot of the different record keepers or investment firms.
Okay, you just threw in a new word.
Uh-oh.
Record keeper.
Record keeper.
Yeah, let's come back to that one too.
All right.
So keep going with the
fair
document.
enough.
Yeah.
So you can get those provided a lot of times for free. All right.
Right.
Unfortunately, a lot of times, as with anything else, you kind of get what you pay for.
Right.
You're getting a free document,
Yep.
which also means you're going to be restricted in terms of what that thing's actually going to do.
Yeah.
Because when we draft documents, there's actually close to 40 to 50 different options, checks, everything else.
Possibilities. Just that's the custom solution while you're interviewing.
Absolutely.
The yeah.
Because you want to know what those are so you can create it properly. Because,
Exactly.
when did you start the company? Do you have employees? Do you not? Who are you trying to give
Do you
money
own
to?
other companies?
Do you own other companies is one of, that trap.
Yeah.
So what we're doing is making sure that all of those different elements are in line, functioning, and set up properly. And when you start also talking about these solo Ks or these other types of documents, what they also don't tell you is you're supposed to actually restate your document every 6 years. So, but it's off the IRS cycle, not yours. So a lot of times when you also get some of these free documents, you don't actually restate them, which means you're out of compliance again. And there's so many different things that are in those different documents that some companies won't even allow. We talk a lot about, which I know we love, is the after tax and the mega Roth. That's a big thing, especially for these owner-only solo plans. But some of those other documents don't allow it. And most people don't even realize that. They're just like, I just have the document. I'm good to go.
That's right.
But you have to actually ensure that the provisions are in the document to even allow you to make those types of contributions.
Yep. So the point is that those free documents are very basic, right? And other things that you and I have seen is they'll start out as this owner-only plan, and all of a sudden they hire an employee and they don't realize that employee needs to be offered this benefit as well, right?
And it's very, very important to understand that same, quote, solo plan, which is why we keep talking owner only, and I'm trying to change the industry away from solo, is that's actually the exact same in general document that a Fortune 500 company. It's not that the plan document is actually different. You don't change, so to speak, from a solo to a group. Mm-hmm. What happens is your testing changes, and then you have to look at what the provisions are inside that document to make sure you don't trip it up because of when that employee is now going to be eligible. And it's all plan documents are a continuance. Just like on a regular trust, you amend it, you restate it. We do the same thing with plan documents that deal with retirement plans. We amend and restate the document to adjust for changes, adding employees, if we're going to change the waiting period. Maybe we actually do want to, bring in some younger people. So it's not always necessarily making it more restrictive. Sometimes it's making it more favorable. So all of those deal with these nuances in the document. And unfortunately, people really don't like reading their estate trust documents. They hate reading the 40, 50, 500-page plan documents with all the checkboxes.
Right, with all the provisions. And frankly, those specimen documents, those standard documents that come from the brokerage houses, they won't change them, right? Because that's the whole idea. They just want to keep it vanilla, right? I always use the analogy like you can go to a store and buy a cake mix, you just add water and you'll bake it and you get a cake, right? When we work with you as a TPA, we're going to go and get flour, we're going to get eggs, we're going to get sugar, right? We're going to put it all together, we're going to bake a custom cake.
Absolutely.
And again, that's the value of the TPA. Now, we talked about record keeper just a minute ago, right?
Yes.
So all right. So we're going to shift now a bit from owner only plans because now we have employees, right? So we introduced the record keeper. Let's talk about the record keeper.
So what the record keeper's role or job is, this is the Fidelities of the world, the Voyas, the principals. What a record keeper's real role is to hold the assets and give the participants a way to interact with their plan.
That's really their goal, by the way, is to hold the assets. They want the money.
They want the money.
Yeah.
So what they really do is basically they take the laws or the plan document from the TPA,
right,
and they basically put the guide rails around so the participant can log in and see their deferrals. The participants want to, if they're putting money into the plan, they want to see that money in.
Yeah, they're doing it paycheck by paycheck.
Absolutely.
$25 at a time, whatever, and they want to see that their $25 shows up. And
which is also important. Please put the money in the plan. Sometimes that's another mistake. But
yeah.
So when it gets in there, that's the record keeper's role. And then they also keep track of the underlying sources. So sources inside, if you even think of like a 401k, a 401k has pre-tax money. It's got Roth money. It could potentially have after-tax money. It could have profit-sharing money in.
If the plan documents allow.
If the plan documents allow.
Yep.
So
and it could also have money from previous employers.
Absolutely.
That could be rolled in.
Funds can come in as well.
Yep.
So you have to then keep track of each of those individual sources inside there because every one of those sources on either the distribution or even while the plan is running has different rules. So you've got to make sure that you have a record keeper that keeps track of those sources, how much is earnings, how much is basically contributions, because especially when we're getting into that Roth world, you do conversions, the times matter.
Yeah.
And what's earnings versus what was contributed, all that stuff applies.
Yeah. And one thing as an employer, you want to make sure when you're responsible for your employees' money is that you have great records and can support it because the IRS will be all over you, right? If you make any mistakes you're a fiduciary for that plan, right? You're responsible for we should probably talk about that too, right?
Absolutely.
But I want to stay on record keeper for a moment because, there are record keepers that bundle services, right? And there are record keepers that allow for more of an open architecture where you can bake cakes again, right?
Yes.
All right. So let's talk about that. Let's do the bundled service first. So how that works.
So when you're, quote, bundling the plan, what you're really doing is your TPA and your record keeper is basically the same company. Now, in essence, they're usually not, just like you'd have two different LLCs, so to speak, with a business. It's very similar. But in general, you're combining those two. So that's what's called a bundled. When you have then a true outside TPA, like what we do, we're not a record keeper. So basically what happens is that allows you then to go pick a record keeper because you can then hire our services and then you can find any other record keeper out there that you like.
And they vary a lot.
They vary drastically.
And not just in terms of price, but in terms of the services and the service level, but the various services they offer, right?
Absolutely.
So picking and choosing the right record keeper, again, going back to that initial conversation with the employer, right? The business owner, what are you trying to accomplish? That's important.
Absolutely. Well, and, we talk about obviously a lot with this, and you do a lot with non-traditional assets.
Yeah.
So, and you have to find, if you go to like a Voya or a principal, not to pick on them, but a lot of times they're not going to allow those types of non-traditional assets.
Yeah.
So,
and the reason for that's pretty simple. It's twofold, right? One is liability, because if they have non-traditional assets, they have potentially more liability. But the other one is they want to keep those funds captured in their mutual funds where they have all their fees and they can make a lot of money. Right?
Absolutely.
Yeah. And that's why sometimes we see these bundled services all in ones are like really cheap, right?
Yeah.
For the employer because they're getting, paying a lot of fees inside of the funds that they're allowed to invest in.
Yeah.
Right.
So
fair.
Understanding kind of how that record keeping, and again, that's the advantage sometimes of unbundling it is now, okay, well, if a record keeper changes or I need to change something, I can also only change one piece. When you have that true bundled solution, and let's say then you want to go to like a grow up plan or change the provisions inside there, you can then, you don't have to break everything. You don't have to totally switch everything inside your plan. So it gives you that type of ability to have a lot more flexibility as well.
Does the record keeper do reporting for the employees?
They do. So basically the record keeper also then handles any like 1099 distributions.
Oh, perfect. Okay.
So
distribution.
If you're looking for an employee that, hey, Billy left, I don't want to necessarily deal with a bunch of paperwork. Typically what the record keepers now do is that you tell Billy to log into his website and request a withdrawal. So all of that then happens automatically, and those 1099s are then handled at the record keeper level.
Yeah.
So that takes it away from you as an employer to have to deal with actually doing 1099s for an employee on a withholding.
Because again, an employer could theoretically do all this stuff, right?
Absolutely.
The question is, do you really want to?
Yeah.
Right.
Or even have a clue how.
Now, you talked about alternative investments, and we talk a lot about self-directed investments, which are sort of the same, right? In a generic sense, I guess, the alternative investment is just something that's not on the basic plan, right? The normal plan. But let's talk about self-directing, period, right? So where you really have control, right? And in terms of what you're investing in, right? So there are three limitations three things you can't invest in inside of a retirement plan, right? They're collectibles, they are shares of a S corporation, right? And life insurance, right? Inside of those plans. Those are the three things. But everything else I can invest in, right?
Yeah.
I can buy crypto, I can buy real estate, I can buy anything I want.
Yeah.
Right.
And it's absolutely true. A lot of people think there's restrictions there. The biggest things you obviously have to watch out for, just like anything in the qualified world, are those prohibited transactions. So prohibited
and disqualified people.
Right. So don't self-deal. Can't loan to your business. There's a few things that you got to really watch there. But in general, if you're trying to just buy a piece of real estate, or if you even you want to buy a rental property, whatever the case may be, all of that's actually available to a qualified plan, just like it would be to your normal, I'll say, IRAs or Roth that most of the people are more familiar with.
Yeah. There's a lot of flexibility there. And once again, that you can do it is a function of the record keeper's willingness in their service, right? Because some will say, no, you have to stay on our menu. You can only order off of this menu. You don't get to order out, right?
Yep.
Right. And so again, picking the right record keeper can be really important for that reason, right?
And that's why a lot of times, too, it's also important to have the plan documents to fit correctly, too, because sometimes the plan documents, even on those, don't allow for it.
Yeah.
So ensuring that even the plan documents allow for those types of assets and all is also very crucial.
So one of the things that we do together that I think is really unique in the industry is this retirement savings plan consulting service, right? And the idea there is, of course, again, whether you have a plan in place already, right, or you are just looking at a plan, this is how we started the conversation, right? They're going to be you either have one or you don't, right, or you want to look at it. But trying to pick from all these different providers, and, you could spend literally countless hours. Talk about a rabbit hole, right? You could go hour after hour trying to interview record keepers, and you won't even know what not to ask or what to ask, right?
Absolutely.
So let's talk a little bit about that consulting thing. So, and how it works, especially during the initial, evaluation phase, and then the first year, and then ongoing. So let's talk about that.
Yeah, it's really important to understand that because, again, you have to understand what everyone's role is, right? So a TPA's role is not to vet record keepers. Their role is basically the documents, the compliance, everything else.
Plan design,
documents,
ongoing compliance.
Besides a few things regarding making sure that you have, non-traditional investments available, that's the only thing. We're done.
Right.
That's the end of the end of the TPA's role.
Which means everything else is now still back on the employer's shoulders.
Absolutely.
Right.
So the beauty of the basically having then an actual retirement plan consultant is what their job is then fill in the rest of those gaps. So number one, actually even vetting the TPA. What type of TPA do you need? Do you need a Cadillac TPA, or is a bundled solution maybe right until you hit some different areas?
That's a great point, right?
So then again, okay, what record keeper fits? So what are we trying to do? What type of investments are you looking for? How much bells and whistles do you want? A lot of these record keepers out there spend fortunes on basically retirement planning inside, or software inside basically the login, but the participants never use it.
Yeah.
But now you have an employer that's basically paying that, or the participants are paying it one way or another.
Yeah.
Record keepers aren't free.
So the goal here is to initially to help them pick the right pieces of the puzzle, right? And get the appropriate players for that particular client, that particular business owner. And that's huge. Again, it's going to save the business owner a ton of time up front. It's going to prevent them from getting in trouble, right? And so now we've gone through this initial phase, right? We got all the players picked out. We know the right player. And by the way, sometimes we even recommend don't do a plan, right?
Yes.
Right? I mean, sometimes a plan isn't the right thing for you to do.
Absolutely.
So don't do it if it's going to, not going to help you. So they move forward with the plan. Now, what are we going to do on a regular basis for the employer?
Yeah, so basically, no matter what, we're going to have probably quarterly meetings, or at least very much consistent quarterly invites, right. Because you've got to make sure to stay on top, because all the time, business owners are changing. They're always evolving. So what happens is if you wait a year to meet with somebody, you're probably going to miss a lot of the things that probably happened during that year. Yeah. You could have addressed, worked on, changed, whatever the case may be.
Yep.
So we meet on a quarterly basis to make sure, A, they're staying in compliance, B, make sure if there's any changes that are going to happen. Because when you find out after the fact, a lot of times you can't fix it. But when you're even just having regular conversations with clients, I find a lot, it's not just always talking about, hey, let me talk about this specific provision, or let's talk about the Secure Act 2.0 and, the new rules for adoption.
Yeah, by the way, this used to be relatively calm in terms of, there were no changes to how this stuff worked for years. And then all of a sudden we got Secure Act 1.0, 2.0, it's like, so now it's much more complicated.
It is.
Yeah.
So we're then monitoring those, having those conversations with the client, just like you would anything else, because what we're also looking for is potential red and yellow flags. What's changed in the business that I want to make sure and address, or that could be a problem to the plan? What are we trying to accomplish? And then helping the client navigate this. So it also doesn't seem nearly as a brand new thing every year, and they can actually deal with it on a very consistent basis.
Yeah, so basically, if there's changes to the law that could affect them positively or negatively, we're having that conversation so that they're aware of it, right?
Absolutely.
Yeah, so the plan consulting service is on top of these other things.
Yeah. Or
it could be just the plan consulting.
Absolutely.
Right, in service. But what a nice way for the employer to know that what they're doing is the right thing to do, and they pick the right players to work with, and they're spending the right amount of money to do the things that they want to accomplish, right? Well, Rone, thank you so much for your time today. For those of you that listen to this podcast, if you want to learn more about retirement savings plans, go to the Lifetime Paradigm site, lifetimeparadigm.com/RSP for retirement savings plan. Read through that page. That landing page is going to explain a lot of the things we were just chatting about today, about record keepers, about TPAs, about plan advisors, right? It'll take you through that. At the bottom of the page, if you're a business owner, click on that button. If you're a financial professional, tax, legal, or another financial advisor, click on that button. If they're a consumer, click on that button. It'll take you away from the site, okay? Put you in a safe place. But go to our website. And again, Rone, thank you for your time today. I think this is wonderful.
Always a pleasure, Randy. Thank you.
All right.